Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what the big corporations are up to. Today we're diving into Corebridge Financial's latest report, and let's just say they're making some interesting moves with their own stock. Alright, so the big news from Corebridge Financial Incorporated is that on the 12th of February 2026, they entered into an agreement to buy back a pretty hefty chunk of their own company's stock. This is called a share repurchase agreement, and it is with a major player, American International Group Incorporated, or AIG as some of you might know them. This isn't just a small deal either. They're planning to repurchase approximately $750 million worth of their own shares. That is a really significant amount. Now, you might be wondering why a company would buy back its own stock. Well, there are a few reasons. Sometimes a company believes its stock is undervalued, meaning the market price doesn't reflect the true worth of the company. By buying back shares, they can potentially increase the value of the remaining shares. It can also be a way to return capital to shareholders, sort of like a dividend, but in a way that reduces the number of shares outstanding. The price they're paying for these shares is set at $30.42 per S-share. This price was specifically chosen because it was the closing price of Corebridge Financial, Incorporated's common stock on the New York Stock Exchange on that very same day, the 12th of February 2026. It's a fixed price deal. The repurchase is expected to wrap up on the 17th of February 2026, as long as all the usual closing conditions are met. For us on the outside looking in, a deal of this magnitude can signal confidence from the company's leadership in its future prospects. Corebridge Financial Incorporated is traded on the New York Stock Exchange under the ticker symbol CRBG. And while we're talking about their stock, it is also worth noting that they have another class of securities registered on the exchange. They're 6.375% junior subordinated notes, which trade under the symbol CRBD. These are essentially long-term debts the company has taken on, and they come with a fixed interest rate. It's good to have a big picture understanding of how a company finances itself, not just through stock, but also through debt. This particular filing, the Form 8, is used to announce major events that shareholders should know about, and a deal of this size definitely qualifies. It falls under Item 1.01, which is for the entry into a material definitive agreement. When a company is buying back so much of its own stock, it's a big signal that management believes the company is worth more than the market is currently valuing it. It is a way to boost the earnings per S-share, because you have the same profit spread over fewer shares. Now, let's look at the actual exhibits filed with this report. The most important one here is Exhibit 10.1, which is the share repurchase agreement itself. This is the legally binding document outlining the terms of the deal between Corebridge Financial Incorporated and AIG. It details all the specifics, and while we don't have the full text here, knowing it is filed is important. Companies are required to disclose these material agreements to keep investors informed. And finally, signing off on this report, we have Elias Habayeb, who is the Executive Vice President and Chief Financial Officer. His signature indicates that he, and by extension the company's leadership, is authenticating this information as accurate and complete. It is always a good practice to see who is signing off on these crucial financial disclosures. So, what does this all mean for Corebridge Financial Incorporated, this share repurchase worth $750 million executed at the current market price with a major entity like AIG? Suggests a strong belief from the top that the company's stock is a good investment. It can lead to an increase in the value of remaining shares and a boost in earnings per S-share. However, it is also a significant amount of cash being deployed, and investors will want to see that this strategic move leads to tangible benefits and doesn't leave the company short on capital for other essential operations or future growth opportunities. It is a bold move, and we'll be watching to see if it pays off for Corebridge Financial Incorporated shareholders in the long run. What are your thoughts on this large share buyback? Does it signal strength or something else? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more in-depth analyses of company filings. And don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.